Good morning. The world says goodbye to porn king Larry Flint, and Joe Biden has finally called China's Xi Jinping to wish him a happy spring and discuss human rights. This after the US sanctioned Myanmar's military government for their week-old coup. Biden's phone call to France's Emmanuel Macron was probably a bit more upbeat, suggesting they untangled the dispute between Boeing and Airbus. Of US indices, only the Dow yesterday managed to eke out a 5% gain, all others ending in the green. The dollar seems to be developing a bullish wedge after mortgage applications contracted by 4% week on week, and core CPI fell to a 0.25% year on year in January. Wholesale inventories increased by 1/3% at 11:30 GMT. Watch out for jobless claims. European equities also ended down yesterday. The FTSE least hit with a 10% drop. The euro remained unimpressed by yesterday's slight CPI gain in Germany, probably because that was followed by a worse than expected 0.8% contraction month on month in French industrial production for December. And the pound's not doing much better after the Royal Charters Association reported a drop to 50% in reports of home price gains. Asian benchmarks are mainly up this morning, led by the Shenzhen as usual with more than a 2% increase. The Nikkei also gained 0.19%, while both Australia and New Zealand lost 0.9% and 10% respectively, as their currencies gained about a 0.25% traction. The Aussie-US dollar pair this morning shows signs of a strengthening climb. We can see it on the MACD's lessening forays below the zero, a bullish RSI with lots of room to maneuver, and that determined cross above the moving average last week that withstood a relatively low volume attempt to cross below. And other than this afternoon's labor data from the US, there's really very little on the economic front that could dramatically change that. Oil this morning is back down to the $58 region after yesterday's double top. That's despite yesterday's pleasing 6.6 million barrel withdrawal from EIA inventories. Meanwhile, gold continues to bounce off support at 1835, and Bitcoin takes a breather at 45K as MasterCard joins the throng of payment processors adopting the token as legal tender. U.S. Treasury Secretary Janet Yellen yesterday told a group of financial sector officials that the promise of cryptos is greatly offset by its use to fund terror and other illegal activities. As head of the Federal Reserve in 2016, she seemed less bothered by the release of the Panama Papers, which illustrated the use of offshore accounts for the same purpose. In fact, the Fed had previously done its best to suppress that information. The Financial Times reports that Microsoft recently offered to buy out Pinterest, whose income has risen by 76% year on year, thanks to a 100 million user increase in 2020. In earnings, Twitter shares soared pre-market yesterday after announcing a 28% increase in revenues. They beat expectations by over $250 million. GM announced a 93-cent EPS of a Q4 of last year, thanks to $2.8 billion income. This compared to a 16-cent loss the year before. Uber reported a 16% loss in revenues year on year to $3.2 billion, but an 8% increase in the previous quarter. MGM Resort its revenue fell 53% year on year to $1.49 billion, generating a 92-cent loss per share. Under Armour revenues fell 3% in Q4 to $1.4 billion, but surprised with a 12-cent EPS. Across the ocean, France's Société Générale yesterday, they revealed a 6% year-on-year drop in revenues to 5.8 billion euros, while in Germany, Commerzbank reported a $3.3 billion loss in Q4, and ThyssenKrupp admitted to a 24% drop in revenues to 7.3 billion euros. Today's big name reports will be coming from Disney, Pepsi, Kraft, Heinz, L'Oreal, and AstraZeneca. And so another finance breakdown draws to a close. Have a wonderful day.